Welcome to Talk Tickers, your go-to source for breaking down the really important earnings calls. Today, we're plunging into Credo Technology Group's Q1 fiscal year 2026 results. Ticker CRDO, by the way.
Right.
And judging by the market's reaction, there's a really compelling story unfolding here, especially in that crucial AI infrastructure space.
Precisely. Yeah, we'll be extracting the key insights from their latest update.
Yeah.
We want to help you understand not just the numbers, which are frankly pretty impressive.
They really are.
But also the strategic moves,
Yeah.
the kind of underlying why behind Credo's high growth narrative.
Yeah.
It's your shortcut to understanding, what really got the market so excited.
Okay, let's get straight to those headlines then, because Credo, they absolutely shattered expectations for Q1 FY26.
Shattered is the right word.
We're talking non-GAAP EPS of $7.52. That's earnings per share adjusted, for the one-offs, gives you a clear picture of core profit. The consensus on the street was only the $1.36. So big beat there.
Huge beat. And the revenue.
Revenue, yeah. A staggering $223.1 million. The analysts were expecting, $190.6 million? So again, just blew past it.
Yeah, this wasn't just a little beat. It was a commanding performance, really. We saw, get this, a 274% year-over-year revenue increase.
Wow, really quadrupled year on year.
Yeah, almost quadrupled. And a very healthy 31% jump just from the previous quarter.
Okay.
And the profitability stuff, just as good. Non-GAAP gross margin, 67.6%. Non-GAAP operating margin hitting 43.1%.
Very nice margins.
Right. So the market obviously loved this. Shares jumped after hours. It signals really strong investor confidence.
Okay, those headline numbers, definitely eye-catching. But sometimes the real meat is beneath the surface. What was the machinery, the underlying driver for this incredible financial performance?
Yeah, good question. It really boils down to operational leverage and a very focused product mix. Product revenue was the lion's share, $217.1 million. That really shows their core hardware strength. They also had about $6 million from IP licenses. But the key thing here for Credo is they're building this financial engine, right? It gets more profitable with every new dollar of revenue.
So costs aren't scaling as fast as sales.
Exactly. Their costs aren't keeping pace with sales growth, which turns that strong top-line growth into even faster bottom-line gains. That's really the hallmark of a scalable, efficient business model.
Right.
And you see it in the numbers. Non-GAAP operating income surged to $96.2 million. That was up from $62.5 million just the quarter before.
Big jump.
Huge jump. And that led to a record non-GAAP net income of $98.3 million. That's a 51% sequential increase, quarter over quarter.
Wow.
Yeah. And their non-GAAP net margin, 44.1%. Just shows you the leverage they're getting as they scale up.
That is quite an engine they're building. So looking ahead then, what did management signal for the near term? those are some big shoes to fill quarter after quarter.
Well, the guidance for Q2 fiscal 26 is just as optimistic, really. They're projecting revenue between $230 million and $240 million.
Okay, still well above what the street was thinking.
Oh, yeah, well above consensus. Non-GAAP gross margins expected to stay robust, somewhere between 64%, 66%. And they're keeping operating expenses tight, between $56 and $58 million.
Good cost control.
Yeah. And for the full fiscal year, fiscal 26, they're anticipating roughly 120% year-over-year revenue growth.
Doubling again, basically.
Pretty much doubling again.
Yeah.
And targeting a non-GAAP net margin around 40% for the full year.
Impressive. And the balance sheet, cash position?
Still very strong, about $479.6 million in cash and short-term investments. So plenty of capital for, future investments, expansion, R&D.
Okay, these numbers are fantastic, but let's talk strategy. Management's calling themselves an execution engine now. How much of that is, real verifiable stuff beyond maybe a bit of hype? And how much are they still just riding that big AI tailwind as an AI beneficiary?
Yeah, that's a crucial distinction, isn't it?
Yeah.
And management was very explicit about shifting that narrative. They framed themselves as this execution engine. They really emphasized their, quote, deep strategic partnerships with hyperscalers, the big cloud guys, Amazon, Google, Microsoft, and their ability to actually solve complex connectivity challenges. So it's not just about catching the AI waves, it's about actively driving solutions, building a lasting competitive advantage.
Okay.
And their three-tiered innovation framework seems key to this. It combines their purpose-built SurDays technology.
SurDays, that's the serializer, deserializer, right, for high-speed data stuff.
Yeah, exactly. That core component for ultra-high-speed data. They combine that with advanced IC design and then a system-level approach using their own pilot software and firmware.
So it's the whole stack, basically.
It's whole stack. It lets them deliver these optimized solutions, right, from the initial design all the way through to final production.
Okay, so this execution engine idea, it seems tangible in their approach. Let's talk specifics. Active electrical cables, AECs. They were big focus on the call. For listeners maybe not deep in data center hardware, what exactly are these and why are they suddenly so critical for AI?
Right, AECs. They're definitely a cornerstone of Credo's growth, and maybe the best example of that execution engine in action.
Okay.
Essentially, they're copper cables, but they have these embedded chips that actively boost the signal.
Ah, okay. So not just passive copper.
Not passive, active. It allows for longer reach and much more reliable high-speed data transmission compared to traditional passive copper. Management highlighted their leadership here, citing, and this is their quote, unequaled reliability, signal integrity, power efficiency, and system cost.
And reliability is key for AI clusters, I imagine.
Paramount. Yeah, imagine building this massive AI supercomputer, right? And then it keeps tripping up because of bad connections. AECs help prevent those really embarrassing, costly link flaps.
Link flaps, yeah. The intermittent connection losses?
Exactly. Those could bring a whole cluster grinding to a halt. Credo says their AECs are up to 1,000 times more reliable and consume half the power compared to optical solutions in certain uses.
1,000 times. Wow.
Huge difference. And half the power. That's significant in a data center.
Yeah.
They're seeing adoption now at 50 gig and 100 gig per lane speeds. And it's expanding beyond just inside the rack, now going rack to rack, even connecting GPUs directly.
Okay.
The key takeaway from management was pretty blunt. If customers can use an AEC, they will use an AEC.
Huh. So copper's making a serious comeback then. It's amazing how an older technology gets reinvented for these cutting-edge uses.
It really is.
But okay, beyond copper, what about optical? Are they playing there too with this execution engine mindset?
Oh, absolutely. And that's what they're calling their next big thing. Actually, over half their R&D spending is tied up in these optical projects.
Really? Half? Okay.
Yeah. Credo's on track to basically double their optical revenue in fiscal 26. They're delivering these advanced DSP solutions.
Digital signal processors.
Right, those specialized chips for processing digital signals. They provide these to the optical module makers, and they're developing both full DSPs and also something called linear receive optical, or LRO solutions.
LRO.
Yeah, linear receive optical, going up to an incredible 1.6 terabits per second.
1.6 terabits. Okay.
And what's really interesting is their strategic leap. They're going straight to 3-nanometer chip technology for power efficiency.
The cutting-edge manufacturing process.
Exactly. Smallest, most advanced available, it drastically cuts power use and boosts performance. They know the 1.6T market will take time to mature.
Right. It's still early days.
It is, but they're positioning themselves right now for that future high-volume adoption, aiming to have the most power-efficient solutions ready when it hits. Again, it's that execution engine thinking, planning not just for today, but for tomorrow.
Makes sense. Okay, what about retimers? Are they just for like traditional Ethernet networking, or are they finding new life in AI too?
No, definitely not just traditional networking anymore. I mean, their standard Ethernet retimer business did show strong results. But the really interesting part is their recently launched PCIe retimer family.
PCIe, like for connecting GPUs and storage.
Exactly.
Yeah.
That's gaining significant traction, especially for these AI scale-up networks. They're expecting actual PCIe design wins in calendar 2025.
Okay, next year.
With production revenue starting in calendar 2026. And this really broadens their total addressable market, their TAM, significantly.
Right.
But here's a critical point management made related to all the different connection types out there. Their solutions, they say, are agnostic to the 200 gig per lane protocols.
Meaning they work with different standards.
Yeah, whether it's scale-up Ethernet or UL or NVLink Fusion from Nvidia or PCIe Gen 7 and beyond, because they all use the same underlying SurDays technology that Credo provides.
Ah, okay. So it's like a universal adapter for high-speed data. Doesn't really care what protocol you're running on top.
That's a good way to put it. It just works efficiently underneath.
That protocol agnosticism, that sounds pretty powerful. But let me push on that a bit. If the underlying tech is so versatile, does that make them more adaptable? Or could it potentially expose them to, I don't know, broader competition down the line? How does management think about that, especially with, competitors and those patent settlements we heard about?
Yeah, that's a really perceptive question.
Wow.
And they did address it. The patent disputes they had over AECs with Amphenol and Volex, those were settled back in August.
Okay, so that's resolved.
That's resolved. It removes a big legal cloud,
Yeah.
clarifies the competitive playing field. Management really believes their strong IP portfolio, their integrated solution stack, that whole hardware plus software thing we talked about, and their focus on delivering the next generation solutions first creates a pretty formidable moat around their business.
Making it hard for others to catch up.
Exactly. Makes it very difficult for competitors. And they see the overall market actually expanding now with copper, specifically these AECs, starting to replace optical in some rack-to-rack uses. That's kind of a first for certain applications.
Interesting shift.
Yeah. So they expect their IP will be respected, which is obviously crucial for holding off competition long term.
Okay, makes sense. Let's talk about customers. Concentration risk has been a wash item for Credo investors in the past, right? Having just a few huge customers.
Definitely.
The diversification strategy sounds good on paper, but those top 3 customers still make up a massive chunk of revenue. Does management acknowledge that as a vulnerability, or do they see the benefits of being so tight with the hyperscalers outweighing the risks right now?
They definitely addressed it directly on the call. In Q1, yes, 3 hyperscalers were over 10% of revenue. One was 35%, another 33%, and a third at 20%.
Wow, yeah, that's concentrated.
It is. And they reiterated that they expect 3 or 4 customers to stay above that 10% threshold as these big hyperscale buildouts continue. But, and this is important, the diversification story is strengthening.
How so?
Well, a 4th hyperscaler made its first material revenue contribution in Q1, and they expect that one to become a 10% plus customer for the full fiscal year 26.
Okay, that helps.
And there's more. A 5th hyperscaler is currently in qualification testing, and they expect that one to start showing some traction by the end of this fiscal year.
Okay, so progress on diversification.
Yeah, it's part of a deliberate strategy. Diversify across customers, across the physical medium, copper and optical, and across different protocols. They also made the point that while any single customer's ramp might be uneven, lumpy.
Sure, deployment cycles.
Exactly. Every data center partner they work with is scaling up overall.
And are they looking beyond just those established hyperscalers? Any other growth avenues?
Yes, absolutely. While deepening those big relationships is obviously key, they also see significant opportunities in what they call the neo-cloud and sovereign markets globally.
The neo-cloud,
Yeah.
sovereign, like specialized or regional clouds.
Yeah, think specialized, often localized cloud infrastructure, maybe government clouds or industry-specific clouds that still need that same high-performance connectivity.
Yeah.
And interestingly, they specifically mentioned having connections with, quote, the big GPU guy, meaning Nvidia.
Nvidia. Okay.
For Credo products that are in production today. So that indicates their reach is broadening beyond just the traditional hyperscalers, right into the heart of AI acceleration itself.
Got it. Okay, so for you, the listener, let's boil this down. What's the so what here? Why should this deep dive into Credo's earnings be on your radar?
Well, I think this call paints a really clear picture. You've got a company right at the heart of the AI infrastructure build-out, and they're rapidly turning market demand into actual, tangible financial results. That significant operational leverage we talked about. It means their revenue growth is translating into even faster profit growth. That points to a really efficient, scalable business model.
Right. The engine is working.
The engine is working. And a TAM expansion getting into PCIe retimers, AECs, replacing optical in some new areas that shows long runways for future growth. Yes, customer concentration is something to watch.
Always is with suppliers like this.
Always is. But their diversification strategy, bringing new hyperscalers online, expanding use cases across their product lines, it provides a pretty strong counterargument. And look, the market reaction was bullish. They're outperforming the broader semiconductor ETF, the SOXX. That underscores the positive sentiment here.
Okay, solid summary. All right, let's shift gears for our This Is Not Financial Advice segment. Time to pitch an outrageous but plausible trade idea based on everything we just discussed. What have you got?
Okay, here's my pitch. We heard Credo confirm their AECs can be up to 1,000 times more reliable and consume half the power compared to optical in certain rack-to-rack scenarios, right?
Right, that was a key takeaway.
So the trade idea is this. You tactically short a specific established optical component maker. Find one whose business is really heavily reliant on those traditional, maybe less efficient optical links inside the data center that AECs are now challenging.
Okay, so shorting the potentially disrupted player.
Exactly. And then simultaneously, you go aggressively long on Credo, Becker CRDO, maybe through something like out-of-the-money call options, perhaps expiring mid-calendar 2026.
Why mid-2026?
Well, that gives you time to capture not just the ongoing AEC strength, but also the anticipated production revenue kicking in from those new PCIe retimers in calendar 2026.
Ah, stacking the catalysts.
Right. It cements that execution engine story and plays on the accelerating shift from optical to AECs wherever it makes sense from a performance and power perspective. It's basically a bold bet on this efficiency-driven structural shift happening right now in data center. Interconnects a shift Credo seems uniquely positioned to benefit from.
Interesting. A pairs trade, essentially betting on disruption. Okay, definitely not financial advice, but provocative.
Provocative, but plausible, hopefully.
So there you have it, a pretty comprehensive breakdown of Credo Technology Group's impressive Q1 FY26. You've got record revenues, strong guidance, strategic wins in AECs, optical DSPs, PCIe retimers. Credo is clearly a name to keep watching in this whole evolving AI landscape.
Yeah, we've really seen how they're trying to transition successfully, it seems so far, from just being an AI beneficiary to becoming this true execution engine. And it's backed by that significant operating leverage and what looks like a clear roadmap for more diversification and market expansion.
And for you, the listener, maybe here's a final thought to chew on. If one single component, like an AEC, can suddenly become 1,000 times more reliable and cut power use in half, what other good enough solutions, maybe in other fast-growing industries, are just sitting there ripe for that kind of radical disruption?
Exactly. It's a great question. Keep that in mind as you think about the future of high-performance computing and other tech sectors. Thanks for joining us on Talk Tickers.
And just a reminder, of course, this deep dive is purely for informational purposes. It is absolutely not investment advice. We really appreciate you tuning in, and we look forward to bringing you more essential insights from the world of earnings calls next time.